Good morning, everybody. Hope everybody had a great weekend. This is the live market open for November 30th. I'm Yohay, Elam of Forex Crunch and Market Movers, doing the show for FX Read as usual. It's the last day of November, but the beginning of a very, very busy week. As always, we'll cover recent developments, various charts and levels, of course, or also according to your questions, and discuss the next 24 hours. If you cannot see the chat box under the video, please go to the address here, tlk.io/fxrate-forex-live-video. So let's take a look back. First of all, what we had on Friday and early this morning. We had UK GDP coming out as expected at 0.5%. Also, the year-over-year figures were, as expected, unchanged. So nothing to see there, but the pound is still a bit under pressure. We're seeing it here at 150.37. We had a dip towards 150, still staying sort of shy of that very round number, but dipping below previous support. Despite the OK GDP, these dovish words from the Bank of England again and again, worried about inflation, are still weighing on the British pound. 150.60 is resistance, followed by 151.15. Okay. We had overnight a few developments in Japan. We had the governor of the Bank of Japan, Kuroda, basically showing no hurry to act according to some of the central bank's figures. In Tokyo, the inflation is moving nicely up or has good prospects, so there's no rush to act. Dollar yen fell to this double bottom last week of 122.20. Well, you can also look at it as higher lows, but I think it's very close to this line, but not going anywhere fast. The big levels to watch here are 122.20 and 123.60, and in the middle we're around 122.80, 123.30. Okay, and in addition, we had from Japan retail sales coming out better than expected, 1.8%. So all in all, the Japanese yen is not under pressure. It's feeling relatively good. Let's see if we can have a breakdown on dollar yen below 122.20. But remember that, of course, the other side of the equation, dollar is relatively strong, so maybe the Japanese yen can gain ground against other currencies. In New Zealand, we had business confidence advancing to 14.6 points, the best in 6 months. So we have a few contradicting figures from New Zealand. On one hand, milk prices continue falling. On the other hand, the economy, business confidence, housing, employment, things are okay there. The wide range is 65 to 66.40. We're currently in the middle of this kind of range trading. What else do we have? Overnight, Australian company profits rise nicely, 1.3%, better than expected. Aussie dollar made an attempt to break above resistance here at 72.80 and failed, but still holding on to relatively higher ground. 71.50 is support, 72.20 is sort of the pivotal line in the range. Below we have 70.65. We have a rate decision in Australia tomorrow. We have lots of events in general. Maybe we'll talk about those events later on. And this morning, German retail sales missed with a fall of 0.4%. A rise of 0.4 was expected. So euro dollar, I must say, didn't really affect euro dollar, but as you can see, the pair trends down. There is no change. It's sort of grinding its way lower, each time finding some kind of base on lower ground. Currently, 105.86, 106.30 works as some kind of resistance, and 105.66, which was last week's low. Even a double bottom on Friday remains support. The low for today has been 105.70, so still around this kind of line. So this is the basic range. Euro dollar is certainly under pressure. The big event of the week is, of course, the ECB. We have lots more. The main event for today is also comes from Germany, also from the Eurozone. It's the German CPI. Let's look at the FX Street calendar here on Forex Crunch. So we had retail sales disappointing, and we have here the inflation figures from Germany. It's more important to look at the year-over-year numbers. These are the national numbers, okay? So we're expecting a rise from 0.3 to 0.4%, but it's also worth taking a look at the harmonized index of consumer prices, HACP, which basically means the European standard. So here we're expecting also a rise from 0.2 to 0.3. Now, it's important to note that because of the because of this structure of Germany, we have releases from the various German states throughout the day. Okay, so we might have some influences along the way and some guidance towards the actual release at 1 GMT. Okay, let's see if I can get some figures for you. I don't remember which state releases it first. Saxony, okay. There's 16 different German states. They reported 0.1% month over month instead of 0%. Year over year, 0.4 instead of 0.2 last time. So we might have, if we look only at this figure, we might have some kind of better than expected figures. These, of course, feed into the into the all-European CPI that we have later this week, and we had on Friday Spanish CPI, which came out better than expected. Now, in theory, this is supposed to influence the ECB decision later this week, and in theory, if inflation is looking better, we should have higher euro. But as I mentioned last week, Mario Draghi, despite the improvement in core inflation, Draghi said that he sees some weakening in the strengthening of core inflation, some kind of complicated wording, but in general, he's not pleased and ready to act. Okay, so that's what's going on there. Let's what other events we have today. We have the Chicago PMI. It's an early release and it's watched. A second tier, not a first tier one, especially in comparison to what we have later this week. So we have the Chicago PMI expected to slip just a bit from 56.2 to 54 points. And perhaps more importantly, the pending home sales, the last housing figure, is expected to rise by 1%. Both are second-tier figures. Both are not as important as all the big events we have later this week, but they still can provide some guidance. Also today, it's the day after the Thanksgiving weekend. Today's Cyber Monday. After Black Friday, we might have some retail companies in the United States report some results on sales, and this can, of course, impact the mood on markets and indirectly impact the US dollar. Let's look. Good morning, Rob. Looking forward to your questions. Good morning, Jax. Let's see who else in the room. Sinatra, JJ. Looking forward to your questions. Before we talk about other events this week, which we've mentioned also on Friday, let's look a bit more at the charts. Pound dollar now slipping back down after an attempt to rise, 150.30. Support is now at the very round number of 150. Resistance 150.60 and 151.15. Euro dollar we talked. Dollar yen. Dollar CAD. It's also an important week for the Canadian dollar because we have the OPEC meeting on Friday. Now we heard some noise from Saudi Arabia that they're changing their minds around oil prices. Let's just look at oil first. Oil is slipping this morning, okay? So we had it rise here, breaking above this 42.70 level, and then reaching 43.40, and now slipping back down. Why did oil prices rise last week? We had two reports from Saudi Arabia. First of all, we had them talk about that they want to coordinate with OPEC and, more importantly, non-OPEC members in order to bring oil prices higher, to coordinate oil prices. And then we had a report in the Financial Times, a question that they asked, what is the price? And they talked to a few Saudis, and the conclusion that they reached is Saudi Arabia wants $60 to $80. Okay, now we're at 41.50. Okay, so they'll have to work hard to coordinate. But markets doubt that. So we did have a rise in the price of oil, but now we have lots of doubts about that. Why? For example, we have Iran coming back online after the sanctions are lifted around the end of the year, and they're ready to pump out a lot of oil. In addition, all these countries, OPEC countries, non-OPEC countries, they still have this open wound from last year. Okay, last year Saudi Arabia more or less went it alone at the OPEC meeting, forcing countries like Venezuela to accept lower oil prices and maintain the market share of OPEC. And I'm not sure that everybody's pleased with that. I doubt we'll have a decision from OPEC or from OPEC plus non-OPEC countries like Norway, Mexico, Russia, of course, to cut production. So I think that oil prices will remain under pressure. The meeting is on Friday. Friday is a very busy day in general. And what this means for oil prices, for WTI, of course, so chart we're talking about $40 support, 42.70 and 43.40. The lows of the year under 38 are more support. And regarding dollar CAD, well, currently we're at support at 133.75. Further support 132.80, 132.40. Resistance, we almost reached the 11-year high for dollar CAD at 134.60 last week. We might see a challenge again. It's not the only event in Canada. We have GDP, we have jobs figures, we have a rate decision. It's a busy week all over, but oil prices, anyway, let's see if we can have a break higher. It also depends on Canadian events. Aussie dollar, we talked about the levels, 72 to 72.80, or more importantly, 71.50 as support. Can't see the chart. Let's try to refresh it here. New Zealand dollar, we also talked about that. Yeah, so we're seeing some kind of rise in the Kiwi dollar. 66.40 to 65 is the wider range. Okay, dollar Swiss at 103 reached higher levels. Remember, it's mostly driven by the Swiss National Bank. Okay, the SNB once again is probably acting to weaken the Swiss franc ahead of some bombshell from the ECB. Okay, so the Swiss authorities want a weak franc against the euro Swiss to reach lower levels, to reach higher levels, and we're already seeing that. Okay, so you can see this trend on euro Swiss. 107.60 was support. We're gradually rising higher. Speculation by markets, yes, but also intervention from the Swiss National Bank. In January, we've seen them also act before the ECB. 7 days exactly, 1 week before the ECB, the Swiss National Bank removed its peg, said we can't do this anymore. And of course, it was a huge event for Euro Swiss, for the franc, for the euro, and for the Forex industry as well. Okay. So we're seeing the Swiss franc weaken against the euro, probably thanks to intervention. And this means also stronger dollar Swiss. We broke above resistance here at 102.50. Let's add another line here above at the current highs. Anyway, these are, let's look at the wider chart of dollar Swiss. Yeah, we're at the highest level since, well, in quite a long time. I would say that's 2010, August 2010, and over 5 years. Okay, but that's thanks to weakness of the euro more than anything else, and the Swiss authorities that want to keep the euro together with the Swiss franc. Okay, any questions? Let's talk about euro pound. This weakening of the pound together with the euro, which it's something we didn't see too much of late. We've seen it in the past, but now it's sort of returning thanks to the dovishness of the Bank of England. So we're at 72.40. We found support at 69.80, further support 69.40, and further resistance 71.40. I'm still bearish on this cross because there's still monetary policy divergence. Despite all the dovishness of the Bank of England, they are still on the path to hike. And of course, they'll talk about it more loudly once the Fed hikes. And the ECB is about to announce more easing. That's the biggest event of a very busy week. Euro yen continuing its weakness, struggling with the 130 level. Support at 129.70. We've reached these lows, and resistance at 130.62. let's zoom in just a bit. And sorry for all those noises. And now let's move to a currency pair that many of you like, pound yen, 184.60. So yeah, we found support here at 184.30 on the Gepi, on the Dragon, resistance at 186. Currently, this pair is trying to find support. We had it break above 188.10. Further support, if we break under 184.30, is at 183.80 and then 183. So these are sort of the main currency pairs and crosses. Have any questions? Move to talking about more events today and more events in general this week. So let's get back here. Oh, we have more events. We talked about the events we have today. German CPI is the most important one. Chicago PMI, and then US spending home sales. During the night, we have a busy night for those of you trading the Australian dollar. We have the Chinese official PMI, the Purchasing Managers Index for the manufacturing sector by the Chinese government, a measure of how things are going according to the Chinese government. We're expecting here a small rise. It's this figure. No, sorry, not a small rise, more of the same, from 49.8 to 49.8, no change, which means basically balanced between growth and contraction. 50 points separate growth and contraction, but this is the official figure. It carries less weight than the Caixin manufacturing PMI, which is an independent figure, used to be HSBC one, together with market. We had it bounce from low levels to 48.3 last month. This is the figure, and now we're expecting it to remain unchanged. So this has a lot of impact, of course, on the Australian dollar, because Chinese manufacturing sector imports a lot of stuff from Australia, a lot of commodities, iron ore, copper, things like that. Okay, so that's a big event for the Australian dollar, but it's still not the main event. The main event is the rate decision in Australia. It's at 3:30 GMT. Let's talk a bit about that. Australia. This is the last meeting before February. They take a break, a summer break. It's summer over there in the land down under in January. Recent comments from Glenn Stevens, the governor of the RBA. He was more or less pleased with the weakening of the Australian dollar, more or less pleased with the current situation of the Australian economy. He also said he would love to help, or something along these lines, that he would be glad to cut interest rates if he knew it would really help the Australian economy. He would like to support the economy to be more accommodative, but he's not sure it'll have an effect, okay? So this was a big hint that they're not about to act. This is the first rate decision of the week. No change is expected. Because on one hand, we have a slowdown in the Chinese economy, a slowdown in the Australian mining sector, less investment, capital expenditure. We've seen it last week in Australia, totally collapsed, 9% drop quarter over quarter in Q3, but that's mostly because of the manufacturing sector, the mining sector. On the other hand, if we look at Australia, the situation is not that bad, okay? We had an employment rise, house prices are still stable, and also company profits, which we had tonight, they look good. All in all, I think, as I see it, the Reserve Bank of Australia wants to keep more tools in the shed. Okay, so if we have a weaker Australian dollar in general, not in the past few weeks, but in comparison to a few months ago, then there's no need to act, no need for verbal intervention, no need for no need to cut interest rates. You can leave it for a further date. Okay, so no intention to act, probably not going to rock the boat. Okay, let's see if we have some kind of surprise. Maybe they'll be even more upbeat, optimistic about the Australian economy. In this case, the Aussie can rise a bit further to 74, 75. But or perhaps more pessimistic about the economy, hinting about a rate cut maybe next year in February, March. And in this case, we'll have a fall. But I believe that they'll, my baseline scenario is that they'll more or less repeat the statement, say that the fall of the Aussie dollar is more or less in line with commodity prices, and wait for further developments, wait for the Federal Reserve. On December 16th, wait for more action from China, and wait for more developments in general. Okay, so that's the big event of the night. So tomorrow morning, we'll talk a lot about what's going on in China and Australia. Also tomorrow, before the show, we have the UK bank stress test results. Let's see if it has an impact on the pound. They are more serious in the UK than in the Eurozone. We know that in the Eurozone, we had various types of bank stress tests, and they proved unworthy. In Greece and Ireland, they proved not serious. I'm not sure it'll have an impact on the pound, but I'm just mentioning it. Okay? Any questions? We'll move to more events this week. This is euro dollar. Let me try to check if we have more figures from German states regarding inflation. It's dripping down all morning, and then we have the final release at 1 GMT. No, nothing that I can see here. Anyway, let's talk about more events this week. Remember that on Friday we did a full preview of the week, and we have a separate recording of that. Thanks to Mauricio of FX Read for this initiative, so you can watch it again and again. But now we'll do a shorter version, of course. So we talked about today. Tomorrow we have Chinese PMI, RBA statement. We talked about that. We have a speech by Mark Carney, the governor of the Bank of England. Let's see if he continues with this dovish stance, or perhaps sees the glass half full. Usually, personally, he's more hawkish than the collective wisdom of the MPC, of the Bank of England, of the Monetary Policy Committee. Tomorrow we have Canadian GDP, the first big event for Canada. It's the figure for September, the last month of Q3. Canada is unique by releasing GDP figures once every month, but this time it's also for the end of Q3, so it's a bit more important. And we have the ISM manufacturing PMI in the United States, a first hint for the non-farm payrolls. Now, the manufacturing sector in the United States has been quite weak of late. The last figure was 50.1, just on the borderline between growth and contraction, and with employment a bit shaky. Let's see if, so it's important to watch the headline figure, to see if it falls into contraction or not, and then to see the employment component as well. Wednesday is even busier. Wednesday we have Australian GDP. Assuming the RBA is not such a big event, assuming they do not rock the boat, the GDP figure for Q3 is very important again for the Australian dollar. If we have a big statement tonight from the RBA, then of course it'll overshadow the GDP, but I think it's still a big event. Then we have Eurozone CPI. Of course, expectations will be changed according to what we have today from Germany. Anyway, it's the preliminary figures for November, hot from the oven, and also feeding into the ECB decision. We have the ADP non-farm payrolls, bigger hint perhaps for the NFP on Friday. Not always a good correlation between this private sector report from automated data processing, ADP, and the actual result on Friday, but of course still important to watch. We have a first public appearance from Janet Yellen. I didn't put this in bold. I didn't highlight this because there's a more important statement from her on Thursday. So she will be talking on Wednesday in a conference. Let's see if she releases something. Probably not. And we have rate decision in Canada. No changes expected there. All in all, inflation, their primary mandate, is doing quite well. And employment was good last time. Let's see what employment brings this time, okay? Thursday is undoubtedly the big event of the week. We don't have too many events, but every event has is huge. ECB rate decision, the biggest event of the week. We're expecting action there for sure. We'll do a small preview perhaps already today. We're expecting, let's talk a bit more about the ECB. European Central Bank hinted back in October, Mario Draghi used the word vigilance, but that was not it. That was not the only thing. Anyway, we're expecting more easing action from the ECB. They want to battle the deflationary mindset. They're worried that their actions are not sufficient to lift inflation, to lift growth. There are some results, but they're not good enough. Many things. There are two main things on the agenda. First of all, the QE program in Europe. Here it's called the APP, Asset Purchase Program. Basically, ECB creating money out of thin air, printing money, buying bonds. It's the program is currently 60 billion euros a month until September 2016. The easiest thing is to extend the program beyond September 2016. The bigger thing to do is to expand the monthly buys from 60 billion to a higher level. According to a poll by Reuters that was released last week, economists expect from 60 to 75 billion. Okay, that'll be a significant enlargement, 25%, but it's a bit harder to do it politically. I believe they will do it, or perhaps a bit less. Okay, they're not going to go really extreme on that front. Another thing that Draghi talked about last time and then over and over again is the negative deposit rate. Okay, so if a commercial bank in Europe deposits money with the ECB, it gets punished. Okay, it pays the ECB interest rate in order for the ECB to keep its money. This currently stands at minus 0.20, and we're expecting it, according to the Reuters poll, to drop from minus 0.20 to minus 0.30. And they're stuck that there will be some kind of two-tier system. The two-tier system means that perhaps retail banks, the ones that you and I deposit money into with our regular accounts, they will have a better rate, negative but not extreme, while commercial banks, while for the wholesale sector for investment, it'll be an even more negative rate in order to encourage investment, in order to encourage companies not to keep money in the bank. Okay, I believe that the cut will be even harsher, more than 0.30. In any case, I believe that the ECB will hit the euro hard because in the past, Draghi has shown his ability to create expectations here and deliver here, under promise and over deliver. So even though euro dollar weakened a lot, even though the Fed meets in 2 weeks' time and is expected to hike for the first time in 9 years, the ECB needs to show its strength, and I believe that will happen. So that was, well, not so short preview. Perhaps we'll repeat it again and update you with the developments. This preview today included some of the developments last week. We didn't have developments over the weekend. Let's see what else we have on Thursday, a huge day. Yellen again. This is the big event from Yellen, the chair of the Federal Reserve. She testifies on Thursday in front of Congress, and this will be her last public appearance before the rate decision on December 16th. The Fed enters this kind of quiet mode in which they don't talk to the press, leading in the 2 weeks, I think, leading to the decision. But this will be her opportunity to hint. First of all, she'll probably have the NFP figures in front of her, and hopefully she'll give us some kind of hint how it is. And more importantly, if the Fed is indeed going to raise the rates, she will not say something very clear, yes, this is what we're going to do, but it'll probably be a big hint like they did in October. And if things aren't going so well, maybe she'll backtrack from that. I think that there's a good chance that they will hike. They have created these expectations. The situation in the United States is looking good. Anyway, this is the implied probability from bond markets for a rate of interest rate of 0.50. expectations are the implied probability is 77% as of Saturday. I don't know why this is, but that's the date, November 28th. Anyway, remember this is for 0.50, and the Fed has a range currently between 0 and 0.25. And if they raise rates, they're expected to raise them from 0.25 to 0.50 range again. So the effective rate will be only something around 0.37. That means that the implied probability shown here for 77% for 50 basis points means around 100% according to bond markets for a rate hike. So expectations are very clear. Anyway, that's a big event on Thursday with her testimony. And we have another big hint towards the NFP, the ISM non-manufacturing PMI. Okay, the services sector, which is doing far, far better than the manufacturing one. Very strong number last time, around 59 points. And let's see if non-manufacturing PMI, the employment component, look good as well. Friday, of course, no more hints. That's the non-farm payrolls. If the Fed is data dependent, indeed, and hasn't made its choice, that means that this figure will be the most important one. Non-farm payrolls, we're currently expecting around 200,000 jobs gained, not as excellent as last month, but good enough. And wages rose 2.5% year over year last time, and they're expected to rise. I have only the month-over-month figures at 0.2. Not as strong as 0.4 last month, but good enough for rate hike. And the last big event for Canada, Canadian jobs report, also on Friday together with the non-farm payrolls. For those of you trading the Canadian dollar, this is a huge day. Dollar CAD with NFP, Canadian jobs report, and the OPEC meeting. So it's an extremely, extremely busy week. It's not the end of the year yet. We still have the Fed decision on December 16th and more events, but this is sort of a huge concentration of events. Okay, any questions? Everybody? Anybody, I should say? In the meantime, we're seeing euro dollar rise to 105.92. Very, very limited range. Today's range is 105.70 to 105.94. Recent events. On one hand, from Germany, we had weak retail sales. On the other hand, we had inflation from Saxony rising more than last time. Nothing really significant. We have more German states reporting later on, and at 1 GMT, the all-German CPI. Okay. So questions are welcome. Let's see what else we had. So referring to what I talked about beforehand, these are the ECB. This is a slide I made last week for the ECB rumors. Reuters probably have really good connections over there. They got disinformation or misinformation. But anyway, this moved markets, that's for sure. Two-tiered negative deposit rate, as I mentioned, and an option to expand QE from 60 to 75 billion, and perhaps buying also municipal bonds. There's talk also about corporate bonds. The rumors did not include numbers, but their poll did include the numbers you see on the screen: negative deposit rate minus 0.30, and quantitative easing program, APP, up to 75. Good morning, Sinatra. I watch Eurodollar and DAX being located in Hamburg, Germany. I don't understand the question. You're located in Hamburg. Yeah. Thanks for the kind words. Yeah, I've been to Hamburg 2 years ago, and they even had a day of sunshine in December there. So I really like the city. Yeah, there is some kind of correlation. In general, if you mentioned Eurodollar and the DAX, the primary stock index for Germany and perhaps for the Eurozone, there is some kind of if the ECB indeed hits us with more monetary easing, with huge action from Mario Draghi, what does this mean for stock markets? It's good for stock markets because more printing of euros means more money into stock markets, because the money that goes into bonds crowds out current bond markets, current bond holders, and this money goes into stocks. And in general, a weaker euro, the money moves out, so it means a weaker euro. Weaker euro means more profits for better exports for those European companies that export, and this also supports the stock market. But a good stock market also draws money, and this could eventually strengthen the euro in the longer run. Okay. Question from Alexei. Hi, it's nice to hear from you again. Now my question, let's say that the Fed do not go hawkish this time either, and then would it mean that the NFP will be poor just because they already know in advance the NFP? Yeah. Yeah, Yellen is very, very careful, very cautious. She has experience. She will probably deflect tough questions from politicians. She will deflect. She will probably try to avoid hints. But if we hear something that isn't very hawkish, we might expect some kind of weak NFP figure. They don't want to come out in a foolish manner. Okay. So, for instance, in October, we had the Fed decision one day before the GDP figures, and they came out. The Fed was more hawkish than expected, and we were talking in the show, I think, about the Fed doesn't want to come out foolish. So, indeed, the GDP figures were good enough. They came out within expectations, and the components showed that there's more private consumption, big drag from inventory. So the headline was okay, and the details were very positive. So we could understand from what the Fed said that the figures would be good. This doesn't always happen. James Bullard of the St. Louis Fed does it in a better manner. If he's very optimistic, you can see that the NFP will be good. If he's very pessimistic, it'll be weak. We don't have an appearance from this guy this time. These things don't happen that often. The Fed is quite cautious, yeah, but we should watch out in her speech for anything jobs related, okay? And also in general, question, how do you see Euro Aussie? Let's look at the Euro Aussie chart. Euro Aussie, I think we talked about it in the show. It's a bit tougher now. Maybe I should update these lines. No, it's a bit struggling now. No, maybe if we put the line here, it looks a bit better. It's a bit rough. Okay, it's killing this 147 line. It's sort of battling this line. We can add resistance here at 147.60 and support at 145.75, more or less, and add another line here. The trend is clearly down. We have lots of stability in the Australian dollar, some good employment reports from Australia, stability from the RBA. We talked about all that. And in the Eurozone, they're expected to announce more monetary easing. So that's the sort of, that's what weighs on the euro. I see this trend is continuing, and perhaps a challenge of the 145.80 line, because we're going to have probably big news from the ECB. Okay, so my tendency is bearish on this specific currency pair. Doesn't mean I'm hawkish on the Australian dollar, bullish on the Australian dollar, but hawkish on bearish on the euro. Okay. DAX just exploding to the top above 11,300. Okay, I must say I don't follow stock markets very closely, but as I said, there's a correlation between mean, okay, I don't have only a daily chart here. Yeah, so if we look at the DAX, the German stock index, next level to watch here is 1180 and 12,400. Sorry, is put support here, resistance here. Anyway, as I said, strong, more ECB printing, more. It's better for European stock markets. Okay. Euro dollar is back to the same narrow range. We're waiting for developments from Germany. Okay. Any more questions? Soon get to the wrap up for today. That's the correlation I see in any case. Yeah, okay. So let's begin the wrap up, and if you have more questions, we'll answer them at the end. This is the wrap up for Monday, November 30th. I'm Yohay Elam. Very busy week starts today. We have the recent developments where UK GDP came out as expected, but the pound remains weak on dovish sentiment. Relatively good news from Japan, from retail sales, and from the governor Kuroda, no hurry to act, supporting the yen, still in range. New Zealand business confidence, also good news, highest in 6 months, 14.6. Same good news from Australian company profits. They rise nicely, 1.3. In Germany, retail sales did disappoint with a drop of 0.4. And we have today, the big events for today are the German CPI. So far, the hints are positive. The initial numbers from German states are positive. But remember, the ECB is very, very dovish on inflation. So that's during the day with the final figure from Germany at 1 GMT. At 2:45, we have the Chicago PMI, and then 15 minutes later, pending home sales. These are second-tier figures, especially in comparison if we look at a very, very busy week that we have this week. The bigger events are during the night, all around Australia. The official Chinese PMI at 1. At 1:45, the Caixin manufacturing PMI expected to remain unchanged at 48.3. Independent figure about the state of the Chinese manufacturing sector, critical for Australia. And then we have the rate decision by the Reserve Bank of Australia, by the RBA, at 3:30. Okay, let's look at the charts. Euro dollar depressed in low range. 150.66 is the low we've seen last week, the lowest in 7 months since April. This works as support. We're not that far from this level. Resistance at 106.30. The key mover is the German CPI later today. Pound dollar ranges, well, support is the very around 150 level, 150.60, 151.15 are support. If we have terrible stuff from from the bank, if regarding the pound, if we have more dovishness in general, then we could see it fall to 148. That's the lower support there. Dollar yen, wider levels are 122.20 to 123.60. Currently, more or less in the middle of this range, 122.86. Further resistance, 123.20. Dollar CAD, important week for the Canadian dollar, currently around just above resistance at 133.80, or support, sorry. Further support 132.80 and 132.40, resistance at 134.60, the 11-year high. Australian dollar, towards the big events, it has failed to break above high resistance at 72.80, currently at 72, some kind of support. 72.20, and further support at 71.50 and then 70.65. Okay, Kiwi dollar last one I'm watching, from the wide range between 65 and 66.40, currently more or less in the middle of the range, 65.56. Okay, so we're at the beginning of a very busy week. Expecting movements, especially today in euro dollar because of the German CPI. And all in all, the big event of the week is the ECB rate decision. But very huge events in the United States. Very busy week for CAD. Very busy week for the Australian dollar. Lots of other events everywhere else. Anyway, that's it for today. We'll be here tomorrow at the same time. Tomorrow will be busier than today, and we'll have some developments to talk about the first day of the month. Another thing that I didn't mention is that it's the last day of the month. It means that we might have some last-minute adjustments. We have already seen some movements on Friday, the penultimate day of the month, and also Friday. So today we might see a bit more action around the London fix at 4 GMT, but it's more important to watch. Well, there are, of course, more important developments in markets that could have more impact than this end of month scramble. And after the scramble, after 4 GMT, we might see everything coming back to normal. Okay, so that's it for today. Thank you very much, everybody, for coming. Looking forward to see you all tomorrow and to address more questions. So have a great day, invest responsibly, and see you tomorrow. Bye-bye.